The S&P 500 index tracks the largest companies in the United States. Its stocks are curated by the S&P Index Committee, which selects companies based on a number of factors, including market capitalization, industry affiliation, and liquidity. But what if you want to invest in S&P 500 stocks and don't have the temperament to sift through and analyze 500 companies? Then consider an S&P 500 index fund or exchange-traded fund that will help you invest in all those stocks. And we'll show you how to do it easily. The S&P 500 index was introduced in 1957 as the first market capitalization weighed stock index in the United States and is widely regarded as the best single index for U.S. large-cap stocks. The index has traditionally been composed of 500 of the leading U.S. companies, although this number can fluctuate. The average market capitalization of stocks included in the index is $27 billion, and the highest is $2.2 trillion. Let's start with the biggest ones. To a large extent, the stocks in the S&P 500 reflect the growth drivers of the U.S. economy. For example, the top 10 constituents of the S&P 500 by index weight as of September 30th, 2022 are as follows: Apple, Microsoft, Amazon, Tesla, Alphabet, Class A shares, Alphabet, Class C shares, Berkshire Hathaway, Class B shares, United Health Group Incorporated, Johnson & Johnson, Exxon Mobil Corp. An estimated $15.6 trillion is indexed or tied to the S&P 500, with indexed assets accounting for about $7.1 trillion of that total as of December 31st, 2021. Index ETFs versus index mutual funds. You cannot invest directly in an index because it's simply a measure of the performance of the securities that comprise it. However, you can invest in an index through ETFs and index mutual funds, which attempt to replicate the performance of specific indexes. ETFs focus on passively replicating indexes, giving investors access to every security within a given index. Thus, with an S&P 500 ETF, investors have access to every security in that index. Index ETFs are generally low cost and trade like stocks throughout the day. Therefore, they're very liquid and subject to intraday price fluctuations. Buying an S&P 500 fund or ETF. If you want to invest in S&P 500 ETFs at a low cost, you can get exposure through discount brokers. These financial professionals offer commission-free trading and an all-passive ETF products. Note, however, that some brokers may require minimum investment amounts. S&P 500 index funds also trade through brokers and discount brokers and can also be purchased directly from the fund companies. You may want to manage your portfolio through an advertiser or broker, or you may prefer to manage a portfolio of funds that are all housed with a particular mutual fund provider. What you should watch out for. Whether you're a beginner or an experienced investor, there are a few things you need to consider before investing your money. If you don't already have an investment account, you should find a broker or investment company where you can buy shares of your chosen ETFs or mutual funds. Cost is an important factor in any investment. The expense ratio for ETFs is the total annual cost that investors pay to the fund manager. An expense ratio between 0.5% and 0.75% is considered good. Anything over 1.5% should be treated with caution, as funds that charge such expense ratios are considered high. Many mutual funds have front-end loads or commissions associated with them that are paid by investors to fund managers. These can be classified as front-end loads or redemption fees. The former are charged when you buy the fund, while the latter are due when you sell your fund shares. There are no fees for funds sold directly by the investment provider. Although cost is an important factor, don't forget to look at the fund's performance. You can find the fact sheet for each investment on the website of the company offering the ETF or mutual fund. How to invest. Choosing the right funds is only half the battle. Knowing how to invest in them is the next step. Write down the name and ticker symbol of all the funds you're interested in, as you'll need this information when you start buying shares. Then, determine the amount of capital you have available. This will help you figure out how much money you can pay your brokerage firm for fees and commissions. If you don't have an account yet, find one that fits your criteria. If you don't have a lot of capital, look for a firm that offers low-cost trading options. Once your account is set up, you can start investing in your funds. Advantages and disadvantages of investing in the S&P 500. If you're still on the fence about investing in an indexed ETF or fund, consider how much time it would take you to research each stock. After all this time and effort, you may find that the investment performance is well below what you could achieve by investing in an S&P 500 indexed fund or ETF alone, because it is extremely difficult to beat the market. Legendary investor Warren Buffett has some sage advice for would-be stock investors. Buffett has stressed many times that the average investor is best served by investing in an S&P 500 index fund rather than trying to pick stocks. At Berkshire Hathaway's annual meeting in 2021, Buffett underscored this point by pointing out that 20 largest companies in the world by market capitalizations in 1989, none of them are in the top 20 today. Investing in an S&P 500 ETF or fund is a one-time solution to investing in many of the most dynamic companies in the world's largest economy. You do not have to spend countless hours analyzing and selecting stocks, and the index shows consistent performance over the long term. Over the 10 years ending October 4th, 2022, the S&P 500 posted an annualized return of 10%. Advantages. Investing in the S&P 500 gives investors exposure to some of the most dynamic companies, such as Apple, Amazon, Google, and Tesla. Consistent long-term returns. Although returns can fluctuate wildly in any given year over a long-term period, the S&P 500 has shown consistent performance. No complicated analysis required. When you invest in the S&P 500 through an ETF or index fund, you do not have to spend hours analyzing and picking stocks in a vain attempt to beat the market. Can serve as core holdings. S&P 500 index funds and ETFs are very liquid and trade with tight bid-ask spreads. Therefore, S&P 500 funds and ETFs are ideal as core holdings for most investment portfolios and for advanced strategies, such as covered calls and hedging. Disadvantages. The index is dominated by large-cap companies. The S&P 500 is dominated by large-cap companies, with the 10 largest constituents making up nearly one-third of the index. This means that the S&P 500 index has no exposure to small-cap and mid-cap stocks, which have the ability to grow much faster than large-cap ones. The index carries risks associated with stock investing. The S&P 500 has risks associated with equity investing, such as volatility and downside risk. For example, in March 2020, the index lost nearly one-third of its value in a matter of weeks. Younger investors may find it difficult to tolerate such volatility. Contains only U.S. companies. The S&P 500 includes only United States companies and excludes companies in other parts of the world, such as Asia and Europe. Should I invest in the S&P 500 through an index fund or ETF? Whether you invest in a mutual fund or an ETF depends on whether you want the intraday liquidity of an ETF. For some investors, the ability to trade the S&P 500 intraday like stocks is the main reason to choose an ETF over an index fund. If intraday liquidity is important to you, you should choose an S&P 500 ETF over an index fund. Investing in an S&P 500 index fund is a great way to diversify your portfolio. Whether you choose an ETF or a mutual fund depends on how much you can afford and what your goals are for in the future. Regardless of which option you choose, or whether you choose both, you're likely to see consistent returns. Make sure you have the right brokerage account for your needs so you save on fees and commissions. Of course, if you know more, feel free to let us know in the comments. Also, don't forget to like and subscribe to the channel to see more videos like this.